Hi, this is a quick update. This is after market hours for VOO and the S&P 500. I will also be looking at Microsoft, NVDA, and Bitcoin and Apple, everything here. Microsoft, Tesla. Tesla, a lot of people are thinking about Tesla. Okay, so this is the portfolio right now, just to give you an idea. Made back about 15K since April. I had 30,000 buying power. Now I only have $5,587.78. This is total of roughly $15,000 or $25,000 of buying power that I use, and I'll tell you what I did. Used about 25K in here, or yes, 25K. Average down from 550 to 552, all the way down to 543, and I've been buying at, as you can see here, there's lows of 536.50, and I caught a lot of that. 536, 537, 538, 540s. Resistance was about 550, so I was buying around there, and I was willing to double down and continue to buy this dip. Now there's roughly, why am I buying so heavily? And it looks like the volume in dropping is starting to slow down. If we can get a bounce right around here, back to up here, we'll have some consolidation. It's a good sign. At 540. That's would be area of confirmation, be confirming. Basically, 540. Hopefully we don't get rejected there and then go back down to 530, or more likely a bit under 530, which would be more of like a closer to a 10% drop from 2% to 7. Let's go here. 520. 520 plus 5%. 8%. Yeah, 8% is about, let's say 7%. 8%. 8%. So back to 560, which is all-time highs. Here's 561. Same thing, 560, 561. The goal is to make money on the upper half and the lower half. You know, buy low, sell high. Don't want to time it perfectly. Just want to make money. Keeping it simple. So I've been buying all day today. So it's here, about 550, but the break right here. And here we go. And I've been waiting for this. I've been telling you guys for, what, past month and a half in previous videos. Excuse me, in previous videos, I've been telling you guys for like a few months. I'm like, overextended. Probably gonna, oh my goodness, the dog. Sorry about that. One moment. So I'm saying probably going to break 540 or 550. 550 is the buy, or it's probably going to go to 540 back to the nearest level of support here. And where to go? 550. Hopefully get a bounce here and start chopping around, go back to 550, and eventually make new highs. But even a real bad news, a low here, we're only down. It's only 4% to the bottom. You know, another 5%. Maybe I lose 5%, but I'm buying it roughly 4 or 5% from highs. You know, so it's good. I'm buying it a little bit in the middle, and this is the dollar cost average method. You want to be buying, and the way I'm doing it, I'm trying to do a slightly more aggressive approach, as in I'm buying a large chunk at 5% from the top. And let's go. 532 is the buy. Guess I'm buying it about 4% from the top. 3 to 4% from the top. Yep. So my average is about 3% from the top. But if I make 3 to 4%, let's say 4% on 25,000, that's $1,000. And I suppose, or I assume that once that comes back up, Tesla will come back up a little bit, keep going higher, or the rest of the market. I bought a little bit of. Is looking good. So as I said before, Bitcoin, quick. Bitcoin is looking bullish, but it's also showing, in the short term, we got to see, is it going to hold 100K or is it going to break? The buy is at 90. How do I know? Previous support about 94. It's bouncing off on the month chart, but when you go on the larger time frame, the run starts at about 90, 92, which is right about here. This is the main support. So if you buy from highs, this would be 50 to 75, 50, 60, 70, 25%. And it makes sense. 25%. They do it on purpose. It's an algorithm. It's the main people with the main holders that are pushing the market. The algorithm, the main amount of money, it pushes up, sells off a little. It takes some profit. When it goes sideways, you can tell it's a lot of retail, and then they pump it. A little pullback takes a little bit of profit. They're pumping it more, sell it off. It gets bought back out. And it's the algorithm and the people are trying to somewhat buy at the same prices as each other, and they don't really know where the price is going to go. No one does. But all you can do is be patient. But I would most likely get in at 92K. None of this financial advice. Just this is where I would get in. I bought a couple dollars at 104 at the time, wherever it was. At the time, I wanted to see where it was going to go. It did go higher. It went to about 108. Oh, sorry about that. Dog's barking. But it went about here, 104. That's where I bought it. And, yep, I would not buy a lot. But at 90K, I do want some Bitcoin. At least $1,000. VOO, still looking nice. End of the day, recovered off the 537 bounce, 536. And it's good. If it holds this until tomorrow, we could potentially get a bounce. It's Wednesday right now. This is midweek. But it's the 18th. This is the second half of the month in December. We'll see. Tesla. Quick analysis on Tesla. Tesla's extremely bullish right now. This pullback right here it's healthy. It's healthy. 7 minutes, 20 minutes in the video. 7 minutes, 22 seconds, I mean. Guys, if you are curious why the market is pulling back, before I go over the rest of these stocks, like the video, subscribe, leave a comment if you have any questions. You want to talk to your friends, let me know what positions you got. It'd be cool to see. Bought a tiny bit of Tesla, about 0.5, 0.10 Tesla up here, because it's like slowing down on the pullback. And Apple's looking, everything. So the market's, why is it pulling back? It's pulling back because not that the FOMC just had a report recently, but because it's not about the inflation report. It's not that things are doing bad or things are doing better. We know what's going on. It's that there's going to be rate cuts. We're expecting 4 rate cuts in 2025, and a rate cut is they're cutting the rate of the inflation, the overall inflation, and the rates we have, they're going down. Market goes a little bit up. They're slowing inflation. Markets will go up. But instead of having 4 rate cuts, now we have 2. They told us just now, today, the reason why we're pulling back 5% or a 3% pullback on the day is, I told you guys, 3% pullback on the day. I told you guys this run up that took basically 2 weeks to happen and then consolidated for about 2 weeks. This is 1 month worth of movement. What happened? It's exactly where it is when it started. Crazy, huh? I'm not going to buy at highs. Don't buy high. We're buying low, and we sell high. I could be buying right here a break, which is right here, and it could fall down here. Yeah, if this is some serious bad news, but the base is probably right around here. Serious bad news, but even 520, it's only 5% pullback. If I had something else, this is why we buy SPY. We buy VOO. And what happens then? What do we do when it crashes? What happens if it goes all the way down here and it really crashes? Just dollar cost average. Look at the 5-year. Look at the max. Top 500 companies in the world. This is the U.S. economy. U.S. economy is based off the dollar. And the Americans and the banks, Vanguard, they own everything. Even if we get a pullback to 480, 500, we're pretty much close to 500. 540. minus 10% would be a 10% pullback from here. Would be pretty extreme, but 10% on, let's say, God forbid, president gets killed, something happens, whatever. S&P 500 pulls back 25% from highs, 20%. Or, that would be a 15% pullback, another 10% from here. 15% from pullback, 560, that's 15%, 540, more like a 12%, or 13%, not fully 15%. But if it did, even if on my large investment of 25K, 15%, 15% is about $4,000. I can stomach that. I'm just going to keep putting in, a couple $100 a month, keep making money, keep investing, and you're going to average out on top. That's why you dollar cost average. If you're buying it right here, at any point in the past year, look at all this chop. Huge extension right here. You waited for a pullback, so you bought right here. You try to buy at the base. Or, you try to buy at the base right here. Bought at the base, pulled back even more, all the way to the lower base, which is pretty much here. And 520, it's another 4%, about 10% from highs, and still recovered. The base right here, still recovered. Took a while, a few weeks, but still recovered, chopped up, and it's up huge. You're up tons of gains. And then it comes back, drops down, sells some when it's overextended, by like 5-10%. Where's the base here? The base was about, 6%, 12. So you basically made all your, you made 6%. You made 6, 12, and then there's 6, and then it, went down. You'd still be up money if you bought here, and as long as you're dollar cost averaging, you'll be up, especially in the S&P 500 in the long term. You can't be looking at the chart and thinking of trying to predict days, minutes, weeks, months. You got to look at the years. Look at the year chart. Look at the 5-year. It's the same thing. This is part 15 of 9 to 5 to Riches with Stocks. You can look at part 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Some of them are funny. Some of them are, I'm at work at the 9 to 5. And sometimes I'm at work, sometimes I'm not. But majority of the time, I'm just, telling you what I've learned from 5-10 years of watching stock videos, investing, watching billionaires, watching people's courses. I bought in courses, different things. So I tell you, I make channels myself, and I'm like, I'll make a channel and make videos so people don't have to spend so much time. They can just follow me, and I'll tell them what's going on in the market. If it's a good time, it's not a good time. The right mindset, the psychology, because this is really how you make money. It's not just, when do I buy? What's a specific thing? I want to make 10K a month. No. We're going to make, the S&P 500 10% a year, plus the 1% dividend, and we're going to buy as many dips, and we're going to try to be smart and try to trim and buy, and still keep a large position, and, hopefully long-term, 5, 6, 5, 10, 15 years, or long-term mindset, we'll have, we'll average out to, 15, 20% a gain per year. And just like this, the investment calculator. Just pull this up. This is an investment calculator by NerdWallet, compound interest calculator. Let's say you started with $1,000, which is very easy to do. If you have a 9 to 5, you make like, $1,000, $2,000, $3,000, $4,000 a month. Just, save for 2 months. Cut back. Don't be eating out. Don't spend money on things you don't need to. For 15 years, like I said, I'm 26. I'm basically, let's say 25 years old. I'll be about 30, 40 years old in 15 years. Yeah, I'll be 40 years old in 15 years. And let's say we're getting that 15%. And I'm putting about, $500 a month. It's not too much money, but what happened? The total principal is only 90K. You made 250 interest. You basically made 2.5 times your money. And it's pretty guaranteed. And, unless you have a large crash or you didn't really, extreme bad luck. But even then, let's go, say we're very good, 20%. and we're at 577,000. By just putting in 500 bucks, we started at 1,000. Let's say I started with 10K. Let's say I put 1,000 a month, and I started with 10K, and I'm making that, let's say 15% more realistic, or even 20%. I mean, we got some runners too. Oh, now you're at $1 million. Now you're at, even after tax, now you're at over $1 million. And what happens when you do it for just 5 more years instead of 15 years, doing it for 20? Oh, that 1.3 mil turns into 3.6. The compounding after 5 to 10 years, 15 years really goes crazy. So after 20 years, making about 20% a year, crazy market crashes, you're just slowly investing and, trying to very lower your investing, ease your investing when things are at super, high highs. Stick to the principles, only really buy heavy. Or not buy heavy, but double down or triple down, quadruple, whatever. Get a decent position starting out when it's like 4 or 5% from highs. Wait for that pullback like I just did now. None of this is financial advice. I'm not a financial advisor. You already know this, but I have to say it anyways. $1,000 a month, you're making $3K a month. You can do that. If you make $4K a month and you put half of it somehow, $4K a month, I guess bills are quite high. Let's say you make $4,000 a month when you're a little bit older, and in America, whatever, putting $1,500 a month, 20%, let's say 15%, 20 years, started with 10K, 2.2 million, 2.4 million. So you pay taxes, still about 2 mil. Started with 200 bucks, still at 2.2 million, even if you started with 200. Started with 25K, like me. We didn't start with, but you had 25K because you built it up. Still the same thing, about 2.7. Some people are good, maybe you make 25%, 20 years, 500 bucks, 500 bucks, 1,000 bucks a month. That's $10 million. How much did you put in? Put in 265K. You put in a lot of money. In 20 years, you put in 265K. You're putting basically like 26K a year. Kind of crazy, but now you have 10 mil. And you can do this with a 9 to 5. And that's what I'm trying to tell you. Take a quick look. How's SPY looking? Stabilizing a little bit. Or so I assume. No one really knows what the market's going to do. But we can use support and resistance and trend lines and RSI and whatnot, different indicators to help us know a little bit where it's going to go in the short term. And it's beautiful how it's holding right here at 538.15. Let's see the after hours. When was after hours? Right about here. It was dropping and it continued to drop. If you bought the after hours, kind of holding here. Basically looks like potential retail buyers. Maybe we can, big money sold. Probably buying 3% drop. They're buying S&P 500. They're buying at this is 0.25 positive. So basically this is 0.5%, about 0.5%, and 1% and 3% down. So these guys are, some people are up 3.5%, the market makers 3%, and potentially keep going higher or try to get back to highs or go back down, 5, 6, 7, 10%. Still got a little bit of money, but we're going to be buying that dip slowly. That's all it is, dollar cost average. This keeps going down, I'm going to slowly keep buying. A lot slower than I am now, but you typically don't want to try to time things. You want to wait for confirmation before going in heavy. Confirmation could be things pull back here. Where's the confirmation? The confirmation is the third bounce. Base chopped up here. It only looks like a one little line like this. Looks simple, but it did chop around a lot. This is for multiple days. From 31st to the 4th, about a week of chop, and then it held support, held right about here, and shot up. It rewarded the people it rewarded the dip buys. It rewards you for buying when it's extremely bullish, which S&P 500 in the economy is. There's nothing crazy going on. And there is also always stuff crazy going on, but nothing, that's what made this market drop. It's just, we know the market's it's gonna grow a little bit slower. It's gonna recover slower, but it's still going up. It's still a dip buy. So that's all it is. It's just about risk tolerance. What can you stomach? Can you stomach being down 10, 20%? Buy SPY if you can. 5, 10, 15%. Can you stomach only being down? Can you only stomach being down? You can't stomach being down more than 20, 30%? Don't buy Tesla. You might be down 40% if you're buying at a high. 50%, Amazon, you might be down 20%. Apple, a lot more stable. Microsoft, more stable. SPY, even insanely diversified. That's why we buy mostly SPY. Look at that. This is what I wanted. 70% portfolio diversity into SPY or VOO. I got 10% on Tesla. Beautiful. Up a little over 100%, or it was like 120%. I averaged in a little bit more today, and I bought like $100. PLTR, Meta, up nearly 200%. NVDA, bought 3 more shares today, or 2 shares. That's 8%. So as you can see here, on SPY, we have 70% of the portfolio. We have 10% in Tesla, because I love Tesla. Very researched. 0.5%, 1% on PLTR. Maybe that should be higher, but I don't know the dips. I'm just been buying this less. I'm less risk tolerant on that. Meta, great company, but I'm waiting for a larger pullback. But could be nice. But Meta, I want more of like I want to see the base. I want to see a 563. I want to see a 570. So I'm willing to wait on Meta. NVIDIA, extremely bullish. Could be a dip buy right about here where we are now. Apple, extremely bullish. Still making new highs, not really pulling back. I would want to get Apple, at previous resistance, which is closer to 535, 540. We're at 540, 247, excuse me. I would wait for another few percent drop from here. And it's only down about 3% from highs. About 3% from highs. And I want to get it about, at about 7%. Right here, 7 to 16, about 6-7% from highs. That's where I want to buy Apple. That's my bit of dip buy. A couple dollars higher, if you want to be a little safe, you don't want to miss it, is fine. Amazon, dip buy is probably around the base, 210. You want to be really safe, you can slowly buy in a little heavier, around 215. But be ready. Be aware that it can, potentially still go to insane lows like this. So it's not a low volatility stock. Most stocks aren't. Tech stocks and whatnot, I move a lot. Microsoft back under 540. Large pullback on Microsoft. That's why I wasn't buying up here. But we're up 2%. Not bad. Okay, that's the quick rundown of the market, and you guys know why the market's going down. The sentiment, nothing's too insane. I just bought the dip pretty heavily. You do whatever you want. Market's still not bad. 540 is not bad. I think 540 is the support. We'll see what happens this week and the next. All right, guys. Like, comment, subscribe. It's absolutely free. Do yourself a favor and follow me and watch me build this account $100,000 or more. Only down about $5,000 right now.